Ahead of the Disney earnings call coming out Wednesday morning at 8 a.m. Eastern, Bob Iger and the rest of the House of Mouse did something that we were not expecting. In the face of a possible recession, Disney is now pricing their streaming to a degree that perhaps customers, well, they just might flee. We've got the breaking news right now. Hello, folks. Welcome back to the Pro Channel, the place that explains entertainment, keeps you ahead of the culture curve. And we have breaking news right now that we need to get to you ahead of Disney's earnings call. Folks, we're here to tell you, as you click that like button, that this might not be going the way that Disney had hoped. I'm sure they were at least hoping that the Disney stock price would skyrocket with this news. That does not seem to be what is happening, as investors are waiting to find out how this earnings call is going to go. We're going to have full analysis of that in just a moment. Before we do, though, let's talk about this increase of streaming prices up to 25%. This is incredible, but it may not portend a strong Disney. And the reason for that, folks, is that at a time when Disney is facing perhaps strong economic headwinds against them, they are looking to increase streaming prices by up to 25%. Well, as we know, for years, Disney has been guiding towards profitability for their streaming in Q4 of this year. If you have to increase streaming revenues 25% off of subscribers in order to achieve that, that is not a good look, because that means that your growth is stalling out, perhaps not going to be what they need. Now, we're not here to make any kind of financial advice. Please do not make any financial decisions. Luckily, we are coming to you after the bell, and Disney will have their earnings report before the bell. So we're doing that on purpose to try to make sure you don't make any decisions based on what we say. But here's what Yahoo Finance has to say. They say in the headline, Disney raises streaming prices up to 25%, adds new channels. Now, we've reported in the past that we thought they would add new channels. That's what they're doing. So if you've been following this channel, you knew this was coming. Walt Disney Company is raising the prices of its streaming services with the lowest cost offering, Disney Plus, with advertising climbing 25% to $9.99 a month. Now, one of the reasons I worry about this for Disney, I'm not sure this is a good decision. You are raising the price on the lowest paying customers. The lowest paying customers happen to be those who are probably the least able to afford going up at a time when inflation continues to be rampant across the United States. Disney Plus without ads will increase 14% to $15.99, according to an announcement Tuesday. A bundle that includes Disney Plus and Hulu, both with ads, rises 10% to $10.99 a month. The increases take effect October 17th, just in time again for that final quarter. Hulu and ESPN Plus will also raise prices. And you can see the downward trend for Disney. They popped to about $90 and change, somewhere around 91. This gave them something like a 1% increase over the rest of the stock market, but that's probably not what they were hoping for. 2%-ish is what the entire S&P 500 did in terms of rebounding today. Disney rebounding only 3.5% or so. That is not a huge delta between them. The shares rose as much as 4.7%. Well, yes, they did, but not at the time of closing. As part of the change, the company is adding programming choices to Disney Plus, including channels that stream continuously. And again, we told you this would be coming. Starting September 4th, Disney Plus subscribers will be able to watch ABC News Live and a playlist of preschool programming. Now, folks, we're here to tell you more channels are coming. We've told you this. We're continuing to tell this. The Simpsons channel on the way. Bob's Burger channel's on the way. Marvel, you're going to get that. But ABC News Live, why are they starting off with that as the channel? Well, because of the election. And we'll let you decide how Disney wants to swing with that channel and whether or not you think that will bring more customers into Disney Plus. In recent months, rival online video services, including Netflix, Comcast, and Warner Brothers, have also announced plans to raise prices. Disney increased its streaming prices by as much as 27% a year ago. And that is why, folks, this is a bold move by Disney, but not one that I think is going to go over well, although for the short term, investors may like it. However, the fact that Disney did not increase more than this, I suspect means that investors are waiting until that earnings call to see what's going on with the theme parks. And you're going to hear more about that, of course, on the Valiant Renegade channel, where I will be on as a panelist with Valiant Renegade for the earnings call, 8 a.m. Eastern on Wednesday. All right, folks, let's go to the panel now and talk about what we think is going to happen with Mexican Iron Man and more during the earnings call. Of course, we're looking at tomorrow being the day when Disney's going to do the earnings call. And as we have suggested in the past, Mike, Disney seems to have shifted when they do their earnings calls based on Valiant Renegade. And we mean that. Valiant started this thing, and he was getting triple the viewership of Disney. And Disney decided they needed to shift this thing to a different time. That's not the only thing that was happening, though. Also, we started seeing other channels begin to cover these earnings reports live. And so it was turning into an entire ecosystem. Here's the article we've got out of Simply Wall Street. And it says Walt Disney investors are sitting on a loss of 49% if they invested 3 years ago. This is what we are looking at as we go into.
Is there a footnote that says including Mexican Iron Man?
I was going to say, to bring that headline up right after introducing Mike, it's kind of putting salt in the wound.
Lou, there is no love on this channel here. No love. Like just bring him out and let's beat him up.
Well, I love you.
It's like I
love you.
It's like I feel like I'm in the boxing at the Olympics right now.
Yeah. Well, you would be of the other side, Mike. Many investors, here's the article, define successful investing as beating the market average over the long term, but the risk of stock picking is what you will likely buy underperforming companies. Unfortunately, that's been the case for longer term. The Walt Disney Company shareholders, since the share price is down 49% in the last 3 years, falling well short of the market return of around 15%. So yes, going negative by 50, not as good as going positive 15. Shareholders have had an even rougher run lately, with the share price down 15% in the last 90 days. And that is before, by the way, we had the collapse in the Japanese stocks, which then sank the S&P 500 yesterday, although there has been some degree of rebound, and we'll see what happens. We're not here to make any financial advice, so folks, please do not take anything we say as
summertime to make money. Come on, guys.
Too dang hot in Japan also, apparently. With a rather small yield of just 1%, we doubt the stock share price is based on its dividend. Revenue is actually up 13% over the 3 years, so the share price drop doesn't seem to hinge on revenue either. It's probably worth investigating Walt Disney further. While we may be missing something on this analysis, there might also be an opportunity. Now, I would highlight this, Mike, and I want to get you to weigh in on it, as well as the dividend, because I know you've focused on that quite a bit as we get ready to go into the earnings call tomorrow. Up 13% over 3 years doesn't seem to me to be fantastic in terms of revenue, because if you just had a baseline transaction level, okay, so the exact same transactional power you had 3 years ago, one would presume that your revenues would increase by the same percentage as inflation. So if we were to take a look at inflation over the past 3 years, that 13% no longer quite as potent as this article might suggest. Mike, I'll hand it to you. Your thoughts on what we've read so far?
Well, Disney has been underperforming in the market for a long time. Ask me how I know. Well, I know a Mexican guy that knows. And I think one of the criticisms I've heard Valiant talk about a lot is how, if you look at the S&P or you look at the DGIA, and you're looking at the performance of stocks in general, which, by the way, Disney used to be a blue chip stock. Hello, I mean, Disney once was a company that you could rely on its dividend and its earnings like clockwork. You held the stock. Maybe it wasn't super volatile. Maybe it didn't rocket up. But at least it gave you dividends year after year. You always need two things about Disney stock. It never went down, and if it did, it was only temporarily. And number two is you always got dividends, because it was a company that understood some basics of business. They would create an IP. They'd make a cartoon or a movie animation about it. They would merchandise the crap out of it so that it had penetration into the marketplace, so that families would buy, all kinds of different, Little Mermaid and, bed sheets and backpacks, the list goes on. And then they would institutionalize it by putting it in the theme park, where they would, guess what? Yet again, further merchandise it by giving you a great experience. So you want to go buy something in the park, as well as when you got home, and it would fuse it to the familial bond that the family would walk away from that park experience, and they would have a complete experience, that whether it was on Disney Plus TV, whether it was at the movie theater, whether it was in the theme park, whether it was going to the mall and buying school gear for the kids as they went back to school in the fall. Now lately,
the shows on the ships.
The shows on the ships. You could go on a cruise ship that would be completely thematic, immersive, with nonstop entertainment. Great point, Lou. This is a company that literally was pretty much perfect until about the time that, as Jonas has reported, that Bob Iger decided that he wanted to turn it into some kind of avant-garde tech new audience company beginning over a decade ago by buying stuff that they had no business buying, And when I say they had no business buying Marvel or Star Wars, I mean they had no business buying Marvels or Star Wars, because you should only buy something in business if you know what the hell you're doing.
What about Fox, Mike? What
that
about
crypto
Fox?
situation speaks to that.
How'd that Fox thing go? How we doing with Hulu, Mike?
Exactly. Hi, perfect, bro. That's a great example. Hi, I'm a family-oriented company that's used to putting together stuff for families and young kids, and my name is called Disney.
You said we've been predicting this because we looked at the reservations. Those reservations were before we knew Tiana's was a bust and all these other things weren't working, or the Epcot thing was going to turn out to be nothing. So people had already decided this was not exactly the best place in the universe to go to get a vacation worth the money before all the failures that have happened since.
That's a great point. And I enjoyed, there was a post on X earlier today that I saw where a Disney shill had attempted to post proof that Tiana's Bayou Adventure is running just fine. And they had clipped one of their videos to prove that. They were trying to prove the animatronics are working. They had clipped it and accidentally included in the video 2 broken animatronics, Louis and Tiana. And so they were being called out, oh, look at this. You tried to clip this out, and here it is. There's 3 seconds. You can see it. And so that's where we are right now with Disney. That's where we are.
The excuses from the Pixie Dusters have been my favorite thing. It's hot out. That's why people aren't going, oh, well, that's a new thing for Central Florida. What are they going to do in a couple months, in about a year, when they open that new Buc-ee's in Central Florida? It's going to pull all the crowds away from Walt Disney World.
Maybe Buc-ee's should start building roller coasters. Well, I saw to that point on Epic Universe with Universal Studios opening it next year, which must weigh in, I think, at this point of the stock. I saw a former Imagineer, commenting on some of the design schematics and plans for Epic Universe. And the former Imagineer said, it's perfect. I can't even criticize. And that really goes to say just how much money and how much effort Universal is putting into Epic.
And that is an Imagineer who is known for notes when there should not be any notes.
Well, you must have seen the same thing.
By the way, Mike, if you go back to that business advice that isn't business advice about knowing what you're buying and what you're going to do with it, there is an asterisk if you look very closely. And at the bottom it says, don't teach the world how to do Imagineering right, then stop doing it right while the other guys steal your thunder.
Yeah, after you read the article, Pro, I got something to share with you, because Max and I just got back from Universal, and we saw the layout of that entire model of what is the Epic Universe. We actually ended up spending like 30, 45, maybe 45 minutes in front of that model. They have a whole center. We'll talk about it after you finish the article.
Well, okay. And Mike, also, the crowd does not know what we're planning in regards to the commentary based on that trip. So maybe here in a little bit we can talk about that. But just as you said, here is the article. Wall Street expects the California-based company to post EPS of $1.19 on revenue of $23.09 billion, implying a rise of 8.7% during the quarter. Disney in May swung into profit in its streaming entertainment division. By the way, remember that they gave guidance that would not happen again. Although Iger warned about a soft third quarter due in large part to the seasonality of India sports offerings, and please, oh please, I do not want to hear another thing about crickets unless it's got Jiminy as a first name in this return. I'm so sick and tired of hearing about cricket. But he maintained his expectation of streaming becoming a growth driver for the company in the future. Folks, apologies if you are a professional cricket player or lover of all things crickets. With consumers moving to online streaming platforms, the company has launched its Disney Plus streaming service in 2019 to compete with rivals such as Netflix, which it does not. Netflix just beats the pants off of it. And maybe that's what happened to Donald. Maybe that's why he doesn't wear pants. Content strength is key to shares over time and should benefit Disney Plus revenue growth along the way, said Morgan Stanley analyst Benjamin Swinburne. Swinburne? I like Swinburne better, but Swinburne's the way you say it. However, Loop Capital is cautious given Comcast streaming losses, with the brokerage thinking that this will be a trend this quarter. And so essentially we get into a whole lot of speculation here. It says over the last 2 years, Disney has beaten EPS estimates 75% of the time and has beaten revenue estimates 38% of the time. But as we saw in the prior article, you can beat all that all you want to. The problem is you're beating down your investors, because if they came in 2022, they've lost half their value just being invested in you. Mike?
Talk about a loss of value. I bought in on the dream that we were back when we were in the 170s. I thought we were headed to Netflix territory under my man Chapek. As you guys know, I was a big Chapek fan, right? So, and of course, Chapek got ousted at 109. What was it, November? The prior November.
Mm-hmm.
He was also under siege for about 6 months of his 9-month tenure. So
yeah, in fact, I think it was on this channel that I discussed that. I had a friend in Burbank that had an inside vibe and said that he had 6 to 9 months to get everything together, or he was going to get ousted, and then he got ousted. But I mean, look, I bought back in at the low when I could. I got 200 shares at the low in the high 70s. I think at $79 and change a share. My average basis, I'm sitting at 141, and I don't see any way that I'm literally stuck. And I begin to reflect on this, that there's a lot of people like me. There's Brian at the podcast. He has a very significant holding in Disney as well. I'm larger than mine even, and he's like me, stuck. There's a lot of reasons why this stock is propped up, because you have legacy stockholders that are stuck in the stock. Now, I got this from my mom, who was a stockholder I got my chunk from my mom, who was a stockholder for years. And the thing is that there's no sign from where I sit that this thing is going to get any better.
Mike, when did you get your Disney stock? Just so we can show this in a visible way to people.
So I inherited some of it was in the 30s and some of it was in the 40s when my mom first got it. And then I liquidated and sold somewhere around the 150s, and then I cashed out. Do you
remember chronologically, though, about what month in 2022 you would have picked up most of your stocks?
I don't. I can pull up my Charles Schwab if you want me to.
Well, that's up to you. Let's go with the best.
But what I did is I sold it all, and then I went back in the 170s. So I paid taxes on the 150, on the spread of that, and then I went back in the 170s, and that's where I was at a long time until Nelson Pelton until we got into the 79s.
Well, I can tell you that the 170s were during 2021. So let's just take the middle of 2021. Okay, June 11th, 2021, the S&P 500 was at 4,247. So, Mike, I hate to make you more sick. I hate to turn you the color of salsa verde, but here's the problem, Mike. If you had invested in the S&P 500 June 11th. Yes. And you had held on to that instead, you would have been at 4,247 back then. Even today, after the slide, you would be at 5,200. So 5,200 from about, what do we say, 4,200. So a gain of 1,000.
I just want you guys to know. Come over here, 11-year-old.
Why are you torturing this man on the stream right now?
You got to hear what this kid just said to me in the background, okay? Hold on. Repeat. Say out loud what you just said.
Where's Mexican Iron Boy?
I heard you say that's gotta hurt.
Oh, Mexican Iron Kid taking it to his dad. And folks, we've come to the end yet again. Another video of excellence, bringing you the breaking news and the analysis that you need. I want to thank so many of you for tuning in for the Pro Show, which was Tuesday at noon earlier today, if you're watching this video at the time of release. And we will cover Disney in depth as we go forward this week, including D23 and the fallout. If there is a major change from Disney based on the earnings call, you can expect that we will go live at some point on the day of, but we will find out. Folks, it's been a grand time spending time with you. Thank you so much. On your way out the door, consider clicking the like button. Share, subscribe, click it, stick it to the algorithms. It is the notification bell. Drop a comment down below. Let us know your thoughts and weigh in on what you think might happen with the Disney earnings call. But remember, no financial advice here. None, nada. Jim Cramer, we are not. We're not even Dave Ramsey. All right, folks, we hope you're having a dandy of a day, a dandy of a night. We'll see you soon. It'll be all right. Folks, wherever you are and whatever you're doing, keep learning, keep growing, and keep having fun.
All right, Bob, we need to make sure we got all your legal strategies figured out.
Well, Mr. Lawyer, I'm thinking this is probably a good idea considering everything we've been up to at the company.
First, we need to make sure that you understand that anything and everything you say will likely be used against you. So, you should always wear your heart on your sleeve and say out loud what that inside voice is saying.
Are you sure? That kind of goes against what I know.
Yep. You can then play the ignorance card. Then no one will think you're super manipulative or malicious.
Brilliant.
You're probably just gonna need to hire yourself a lawyer.
Wait, what?
Oh, and by the way, you should definitely double down on everything with the board and that whole proxy war thing. This place is losing money hand over fist, and that means that you can keep budgets lighter and management well paid.
You think I should go and double down on a proxy war with Nelson Peltz?
Oh, absolutely. Just make a trashy video promoting it. This is the company, after all.
Done. That should work. Our investors have been totally ignorant and willing to throw us money regardless of what we do with it anyway. They totally have cause to sue us and for negligence and wasting money. But, they're pretty dumb.
Oh, they probably live in Florida. And Texas.